Hi, folks. Welcome to the Weekend Investing Daily Bite of 24th of November. A dull start to the week. No major action in the market. In fact, the larger part of the market was slipping a bit. Um, Overseas cues are not particularly positive. There is tension in Japan, given that they're doing more stimulus, and the Japanese currency is also a bit vulnerable. There is no news from the US India treaty, tariff treaty, and there was no clarification also, why the RBI let the rupee crack on Friday. So a bit of a limbo sort of a situation, not really going anywhere today. So stuck in a small range. And tomorrow is expiry day on the market, so that perhaps could bring back some volatility to the markets. Let's see what the charts look like for the day. Disclaimer as always, please read fully, understand it, and then move forward in the video, and do subscribe to our channel if you haven't so far. The Nifty moving down 0.42%, so a 2-day low has been broken, and the very short term move that was going up, and we were thinking it's going to challenge the previous high, has been aborted. It can always come back, but today's move is not giving that confidence yet. Nifty Junior down more dramatically, 0.98%. So we've already come very close to the September lows um, after doing this bounce, and that is also not a great formation to see. That while Nifty is stuck at near all-time highs, the rest of the market is actually in some sort of a distress mode. Mid caps down 0.32%, small caps also down 0.65%. We've now broken even the September low on the small cap. So, 2 3 times it has bounced from this level of 16,500 to 600. Let's see what we do this time. The only sort of space which did not really go down was the banking space. Nifty Bank closed at 0.05% down. Gold also absolutely flat, minus 0.21%. Silver is absolutely flat, 0.16%. And the advanced decline trends also don't really give too much confidence right now. The entire day was spent in a gradual decline of the advances. So while we started on an equal basis, by the end of the day, advances were only 141 to 359 declines. And the Nifty heat map can tell you how much heat that there was with Mahindra, ITC, Bharat Electronics, Reliance, TCS, Bajaj Twins, Axis Bank, JSW Steel, um, Tata Steel, all losing ground today. Wipro, Tech Mahindra, Hero Motors, Bajaj Auto were some of the stocks in the green for the Nifty. In the Nifty next 50 space, you hardly have any green. Canara Bank marginally, but Enrain, CG Power, Adani stocks, Hindustan Aeronautics after the recent crash, Solar Industries, BPCL, Masdok, PFC, IRFC all losing ground for the day. In the movers of the day segment, Orient Electric crashed very, very hard. 9% gone on Orient Electric, and very recently the stock was near 215 rupees, and now we've come down to 150s. So always look at trends that are telling you how and when to get out. Whenever previous pivots are getting breached, big pivots are getting breached, do be concerned about that stock. The technicals, the charts do give you a warning ahead of such kind of moves that come. In the sectoral trends, Nifty IT managed a 0.4% gain for the day, but that was a completely the sole sector standing out. Otherwise, you had all sectors losing ground, with defense losing 2.5%, the most, real estate down 2%, public sector enterprise and central public sector enterprise sectors also losing 1.4, 1.3%, metals down 1.2%, energy commodities also down nearly 1%. So no escape from any sector except IT. And defense has virtually again come back to September levels. Misra Dhatu, Astra Micro, BML, Garden Reach, and Solar were leading the sector down. In the US market space, on the previous session, you had some decent gains of 1% approximately on S&P 500, Dow Jones, and Nasdaq. Russell 2000 at 2.7% gain. So that's a huge markup for the broader market in the US. So the US market seems to be in fine fettle. Target Corp, Accenture, Charter Communications, PayPal, and UPS were the stocks going up. The disclaimer here is that the weekend investing US portfolio could have some of these stocks. These are not recommendations, and there could be a investment that we have on that front. Tweet of the day segment. So a lot of people chase trends after they're done, and while the thesis that we have is that you must continue to chase trends till they are not a trend anymore. What has been seen is that about, I would say, 60, 70, 75% folks will wake up towards the sector once it has done more than perhaps 75, 80% of the move. So if we see the last 5 years, there was a huge move in equities in 2020 to 2022 period, specifically till 20 to 21 October. A lot of folks missed that because COVID was such a event which caused a narrative that the world is going to take a long time to come back out of this mess, and hence people did not invest, and in fact, even sold off what they had. A lot of folks. So the smarter ones, of course, were able to add once the market was down. Um, so a lot of people missed that boat, and then in many cities, especially in India, in the real estate space, there has been some huge boom in the last 2 to 4 years, specifically from 2021, 22 to 23, 24, and now perhaps it is maturing a bit. That people watched, and those who did not participate um, missed that. And then from somewhere around 24 onwards, there has been a huge move in precious metals, gold and silver, and hardly anybody participated in that also. So these sort of trends will keep coming from time to time. There's a cyclicality to it. Maybe equities will come back in coming years. Maybe it's the time of something else right now. So don't be bitter about having missed a rally. um, unless you will do proper asset allocation, you will continue to miss this, because it is very difficult to tune out of something and then tune into something on the flip of a coin. So let's say you are invested in 20, 30 stocks, and now if gold is looking really good, you can't get out of all that and then now suddenly buy gold. It has to be an allocation where perhaps you can start to allocate more to gold, or perhaps there is some system that you may have where it dynamically allocates lesser to those uh, assets which are not moving. So participate in everything, but don't sort of try to time the market as such in any asset class. The other tweet was about Japanese yen and the yield going up. So Japan is doing a huge stimulus, $1,000 per person. They're going to distribute checks to their citizens. Money printing, which has been going on, is going through another sort of you know hockey curve stick going up. So US is also going to do stimulus. Japan is also doing stimulus. Every country is doing stimulus in their own way. We are also doing stimulus with Ladli Ban, Ladla Bhai Yojana. All those stimuluses are happening. So all kinds of money printing is happening. The politicians have worked out this great formula. Spend money on people, let the budget go to hell, let it be a deficit budget. People will vote for you. You will stay in power, and then we will see what to do with this deficit. Maybe the next government can take care of it. So it's become a very easy game for the politicians, and our future generations are going to pay for it, because there is no free lunch. Let's get this very, very clear, that there is no free lunch in this world. If you will distribute today, you will have to collect tomorrow. So perhaps taxpayers will foot the bill tomorrow, and if taxpayers will not budge, or they will revolt, then government will try to confiscate things. So this is not really a great place to be at, but that's how the whole world is working right now. So Japanese stimulus can cause the yen to crash, and in order to control the yen crash, perhaps the Japanese yield will go up. If the Japanese yield goes up, then the carry trade that happens where people borrow in Japan and invest elsewhere, that can unwind, and that can cause the whole global equity house of cards to start coming down. So we will discuss all this in another video later in the day. But this is a situation that is staring at us in the face, and we can continue to ignore it or get educated about it. So that's all I have for today's uh, daily bite. We will talk about Japan in the episode later in the day. If you like this content, do give us a like and a share. Thanks. Bye.